Where to invest your money in the financial year 2022? You all might have gone through this question and might be still wondering why to invest, how to invest, and where to invest. For all such why, how, and where, we do have a perfect answer. Watch this video completely for better understanding. Hi, this is Nidhu Nair. Welcome to Tradeplus. So let's start off by discussing the basic question, why we should invest. I have 3 reasons for you to tell you why we should invest. Point number 1, basic element. As we all know that financial freedom is supposed to be the basic element that every individual should pursue. Point number 2, being financially stable. As we all know, all the products that we are using at the same time to meet our financial requirement, we need to be financially freedom. And point number 3 is to beat inflation. If you don't beat inflation in the coming days, then you will be under the hammer for sure. So in this video, we will be discussing about the various investment opportunities that we are having in the running financial year 2022. So some people invest their money for financial securities, while others invest their money for financial objectives. Your investing alternatives should be determined by your risk tolerance and financial goal. One cannot attain financial freedom by just investing in a low returning product, or you can't just put all your money in a high returning product by risking all your money. And that's where proper investment defines its value. Now let's look upon the available investment plans that can give you better returns. 8 popular investment plans in India: equity investment, savings account, liquid funds, short-term and ultra-short-term funds, equity-linked savings scheme, fixed maturity plan, treasury bills, and gold. Most of the Indians prefer to make their capital free and they end up investing in fixed deposit. Do you think that an annual return of 5 to 6% will help you to meet your financial requirement? No. So what can be the alternate option? And that's where equity market, mutual funds, SIP, bonds all have a special place for themselves in this investment world. So let's get into the real investment world by tracking their previous performances. And the graph shows investing in Indian market is always a safe option because Indian economy is one of the fast growing economy in the world and it is expected to touch a $5 million mark by 2025 and to become the 3rd largest economy in the world. So investing in fundamentally strong companies will only help you in getting some handsome returns. And next, getting into mutual funds and SIP. Is mutual funds and SIP the same? It's a common question for all the retail traders. Well, let's crack it out. So, SIP is a short form of systematic investment plan, where in the case of mutual funds, it is an investment product or instrument. Through SIP, you can invest also in mutual funds. As the name suggests, mutual funds SIP, you can invest systematically over a period of time and that can really help you to meet your different financial goals. And at the same time, by investing systematically, it shows the power of compounding. And it's a fact to realize that only by compounding your money, you can multiply your money and have some better returns. And one more major advantage in taking this SIP is that you invest it systematically, which means that it covers all market conditions and helps you to hedge the amount that you have invested without knowing yourself. So now let's see what is bonds. Bonds is nothing but a loan taken out by a company. Instead of going to a bank, the company gets the amount from the investors by just selling out their bonds. In return to that, an annual return will be paid back to all the investors. As it is always good to have bonds, mutual funds, SIP in your portfolio, as it helps you in every market condition and also helps you in having that diversified portfolio. As a conclusion to this topic, the golden rule of sensible investment is to have a thorough knowledge about all the investment plans that you are having in your hand. At the same time, make sure before entering into any sort of investment plans, you go through your financial objectives, time frame, and risk tolerance. If you are happy with all such things, make sure you enter into it. At the same time, in addition to that, an investor like you should distinguish between savings and investments. Now start your investment plans with Tradeplus, like investing in equity, mutual funds, IPO, bonds, ETF at 0% brokerage fee and 0% AMC. For more details, check the link in the description below and make sure you subscribe to our YouTube channel for more interesting videos like this. Thank you.